Gary Gensler was out yesterday, and he was talking about how, reading between the lines on this, investors should still be cautious that this is still a volatile arena, and it could come as a speculative sort of frenzy, and you should be aware of all of these things. Thomas Petterfy actually pointed out that in terms of an ETF, he thinks that it could be a riskier place for investors than just investing in Bitcoin itself, because when you run into problems in the system, he said, you will inevitably see a big discount in the ETF versus the actual underlying issue that it's representing, in this case, Bitcoin. And that maybe gets lost a little bit. It's definitely reading between the lines, and it's paying attention to some of these things. People think, okay, the SEC thinks this ETF is safe. Other people say this is a riskier asset than just owning Bitcoin outright.
So both of them are right. Chair Gensler is right to caution people that this new asset class, it's speculative asset class. You can have people, very knowledgeable people about our markets, people you've had on your show, have said this is going to be worth nothing 5 years from now, or it's going to be worth a tremendous amount. So we have a wide variety of opinions, wide variety of views from market experts. People need to take that into account as they think about whether to put this as part of their portfolio. In terms of what Thomas said, he's exactly right. When you have a product that is removed, a step removed from the cash market, you have the opportunity for dislocations between the cash market and that product. One of the things people are watching right now is, what is sort of the, I'll use the fancy term, carry trade. How much of a discount is there for the futures? I should say for the cash market vis-a-vis the futures. Can you make money now by sort of buying futures, shorting, and the like? And that does show that there is a disconnect here.
AJ, can you explain this to me? And maybe I'm missing something. If the SEC is not comfortable with the underlying asset, which is Bitcoin, clearly they aren't, because they haven't approved the idea that you can buy it directly in this case. Why would they be okay with a futures contract? Can you explain that distinction?
Yeah, Andrew, let's look at what we have here. The regulatory decision around Bitcoin is that it's a commodity. Okay, it's not a security in the cash market. We have had the CFTC regulating the futures trading of Bitcoin for some time. Now, in terms of an actual cash market, this is something to understand. The CFTC has only indirect jurisdiction over the cash market of commodities. So, and Bitcoin has introduced what I would say is a bit of a new paradigm here. There is not a great deal of retail trading in the cash market in commodities as we traditionally know them. I mean, there's some currency trading, oil trading, things like that. But the amount of retail trading in the cash market for a commodity globally is something new.
And then, Jay, real quick, I wanted to pivot and just get your thoughts on what's happened here. I don't know if Becky wanted to jump in on GameStop and this report that we got from the SEC, which didn't say much, and I couldn't tell what that meant.
Well, I think it actually said a lot. If people are willing to take the time, probably take a half hour, maybe a little more to read the report. It's an incredibly comprehensive overview of how our equity market structure works. And one of the real takeaways from this, at a macro perspective, is just how efficient trading has become. Liquidity in markets is not free. In our equity markets, it's very much approaching, pennies on large trades. Okay, that's a tremendous advance. But the report also shows that we need to continue to look at these things to see if we can improve. For GameStop itself, the report essentially says there were some technical things going on. We need to worry about capital at broker dealers. Reducing the settlement cycle can help that. There was some short covering, but by and large, the 20-fold increase in GameStop was simply due to an incredible amount of demand from the retail sector. So I think it's a tremendous report. I commend the staff for what I would say is sort of a non-judgmental overview of exactly what happened. I would encourage anyone in the marketplace to read the report itself.